Spain's property market offers incredible investment opportunities right now. With 320 days of sunshine yearly, a growing population, and a housing supply failing to meet demand, this market is primed for growth. The 2008 financial crisis diminished the number of active developers, and banks remained cautious with new projects, creating a perfect supply and demand imbalance and pushing values up. In this video, I will walk you through the complete process of buying your first rental property in Spain, from preparing your finances to managing your new investment. I will cover both short-term rentals, like Airbnb, and traditional long-term leases, helping you decide which approach makes the most sense for your investment goals. Today, we'll cover why Spanish real estate makes such a compelling investment, preparing your finances, finding the best locations, navigating the buying process with a property hunter, understanding property management strategies, tax optimization techniques, and real-world investment case studies with proven returns. Before diving into the process, let's talk about why Spain is such an attractive market. First, Spanish real estate offers excellent portfolio diversification. Spain has a strong, stable economy that's well integrated with the EU, providing a safe haven for your investment capital. Second, Spanish property prices remain reasonable compared to other European markets. Despite recent growth, you'll still find excellent value outside the central city centers, with entry points much lower than in London, Paris, or Milan. Third, the returns are impressive and multidimensional. Long-term rentals typically yield 5 to 8% in major cities, while vacation rentals in prime coastal areas can deliver even higher returns during peak seasons. But that's just the beginning. Add potential property appreciation of 3 to 6% annually in growing markets, and your total return becomes substantial. What's more, financing with a mortgage can dramatically amplify these returns through leverage, turning a 10% total return into 20 to 30% on your invested capital. In today's economic climate, real estate provides an excellent edge in an inflationary environment, as property values and rental income typically rise with inflation, protecting your wealth. Finally, there's a perfect supply-demand imbalance. Spain's population continues to grow, particularly in urban and coastal areas, while new construction has been limited since the 2008 crisis. With fewer developers active and banks cautious about financing new projects, supply can't keep up with demand, creating ideal conditions for property value growth. Before you start looking at properties, be honest about your budget. For international buyers, expect a 20% to 25% down payment, 10% to 15% additional taxes and fees, and a buffer for renovations and furnishing. The NIE is your Spanish tax ID and is required for property purchase. For more on that, have a look at our detailed video and article. You'll need a Spanish bank account for your property purchase. Most banks require you to visit in person at least once to open an account, so plan this early in your journey. If you're planning an Airbnb or vacation rental strategy, consider Costa del Sol or Costa Blanca for year-round tourism. Madrid and the Balearic Islands have stricter regulations, while Barcelona doesn't allow new short-term rentals. Other cities that could be interesting to check are Valencia, Sevilla, and Malaga. For stable, long-term rental income, focus on major cities like Madrid, Barcelona, and Valencia, university towns for student rentals, growing commuter areas outside major cities, or business districts with demand from professionals. Each region in Spain has different rules about short-term rentals. Some areas require tourist licenses. Barcelona has strict limitations on new licenses, so good due diligence is required. Property selection is critical for substantial returns. Apartments offer lower entry costs and easier maintenance, while villas and townhouses provide higher vacation rental returns. Always factor in all expenses and consider seasonal variations in tourist zones. Watch out for red flags like busy streets, lack of outdoor space, high community fees, low luminosity, hidden community issues, or poor transportation access. The legal steps are straightforward. See our detailed article and video. Start your buying journey with a local property hunter who will save you money through negotiation and protect your interests. Always use an independent real estate lawyer who speaks your language. Have a look at the 20-step model from our property hunters. Recently, we helped an active investor purchase 2 different units in Barcelona over 16 months. The first was a fully renovated and furnished 60 square meter apartment in the €300,000 price range that now generates close to 7% rental yield. The second property was completely renovated and refurbished in the same price range and is rented at an even higher rate. Our clients consistently praise our expertise. As Erwin from Germany states, How to Buy in Spain is the perfect solution for foreign property buyers in Spain. It has excellent knowledge and a comprehensive approach. With our network of 100+ local partners, we can assist you anywhere in Spain. Whether you're seeking a vacation property with income or long-term investment growth, our team will find the perfect property. For Spanish mortgages, non-residents are typically limited to 60 to 70% loan to value, while residents can get up to 80%. Both fixed and variable rates are available with terms up to 30 years, depending on age. Be prepared for more extensive documentation than in your home country. Working with mortgage brokers provides access to multiple lenders, help navigating paperwork in Spanish, often better rates than approaching banks directly, and knowledge of specific requirements for foreigners. Alternative financing options include releasing equity from home country property, developer financing for new builds, or investment partnerships. Lastly, some private bankers are happy to provide funding with your assets as a warranty. Non-residents pay a flat 19% on net income for rental income taxation, or 24% for non-EU residents. Deductible expenses include mortgage interest, community fees, property taxes, insurance, management fees, and maintenance. Additional tax considerations include wealth tax in some regions. For short-term rentals, you must register with authorities to get a tourist license, furnish to an appropriate standard, invest in professional photography, and implement seasonal pricing strategies. Standard contracts for long-term rentals are defined as 6 months to 5 years. Security deposits are limited to 1 to 2 months' rent, and tenant rights are strong in Spain. Technology can streamline management, including property management software, smart locks for vacation rentals, automated booking systems, and remote monitoring options. The right systems enable you to manage your Spanish property investment from anywhere in the world. Buying a rental property in Spain can be a rewarding investment that provides income and personal enjoyment. The imbalance between strong demand and limited supply continues to drive value growth. By following these steps, working with a property hunter, choosing the right location, securing your financing, and setting up efficient management, you're well on your way to success in the Spanish property market. Most of our partners and investors enjoy a real double return. Financial, of course, but also experiencing the Spanish lifestyle themselves, which is priceless.
At How to Buy in Spain, we unlock all the doors to your Spanish property. Did you enjoy this video? Hit that thumbs up, drop a comment, and share with friends. Your support motivates us even more to create more great content. Thank you.